Hey, Puffer Trades! I wanted to do a video analysis update of the stock market, and I'm a little excited right now. It's definitely not because the stock market is going up, but I think, and I posted about this a little recently, I complained a little bit that bar chart had done this thing where every time I refresh a page, if I'm not a premium subscriber, I got this stupid message that was like join bar chart premiere, and it broke my heart because it made me think I was gonna have to convert all the videos, all the charts I wanted to talk about into PowerPoints, and I wasn't sure how I was gonna be able to go live because of that. So I complained about that, man. I protested. I said, you know what? This is wrong. I'm going to use my freaking platform. I'm going to say, bar chart, I love you. What the heck are you doing? And then all of a sudden, magically, coincidentally, a day later, there's no stupid message. I'm able to do videos. It's freaking awesome. Shout out to bar chart. I think there's a lot of people that follow me on FinTwit, and they're a little embarrassed to follow me on FinTwit, so they got to do that thing where they just check my stuff. I think bar chart might have seen what I said. Maybe they didn't. I'm a conspiracy theorist. But anyway, the S&P 500, 1, 2, 3, 4, 5 waves up. I don't even want to talk about the S&P 500. Damn it. I feel like I have to talk about the S&P. But I think this is an ABC correction. I want to talk about the Russell, man. Ugh. I think this is an ABC correction at the 50% retracement. And from an Elliott wave theory standpoint, it's just objectively almost impossible in the super big picture to say that if we look at this low of 348.11, that we have not at least formed 1, 2, 3, 4, 5 waves up. Okay, what that suggests to Elliott wave theorists is that even if we put in a wave 1 right here and had the super correction, the scariest dip ever, Elliott wave theorists would expect this gets bought and we continue an impulse higher. Now, that is not my bias. It's absolutely not my bias. And I'll get into why that's not my bias. One of the reasons is that we look down at the relative strength index. There's a rule in Elliott wave theory that says wave 5 ends with momentum divergence. So if we look at the weekly chart right here, we have the bear argument for the medium term is that this is 1, 2, 3, 4, 5 waves. So we're going to end a wave 1 and we're going to have a correction. Okay, that's the bear argument. It's not mine. The reason that they're saying that is they're going to say, okay, well, 1, 2, 3, 4, 5 waves up. So that's going to be wave 1. We're going to have a correction. Then we're going to go higher. Now, obviously, if we did have a correction and started correcting, the bears would not say, hey, that's a wave 2 buy. We're about to explode into within wave 3. They would say, hey, I can tell you what they would say. What they would say is actually that I'm a furu, which they might be right. And I'm a retail bag holder. And that's actually a wave A, a wave B. And so if we did start correcting, they're still going to be looking for this, baby. Oh, man. Yes, they're still looking for wave C. Are you crazy? With the VIX this low, of course they're looking for wave C, right? And so I have straddles, strangles, and long guts positions, particularly on an ETF called the Metaverse ETF, METV. And I also have a large allocation to ETFs that sell covered calls, and I'm extremely diversified, which, they're not everyone says that Warren Buffett, they have this like Warren Buffett quote where they're like, hey, like Warren Buffett said, don't be diversified. I don't know. I think if you looked at what Berkshire Hathaway owns, you'd realize that Warren Buffett's definition of diversification is much different than most of FinTwit's. But the great Peter Lynch, he was amazing, and he owned an awful lot of them, apparently. Anyway, that was a little bit of a diatribe. There's not very many useful levels right now for the S&P. Break below 380.65 would invalidate that we're nesting from this low. But is there evidence for the S&P? I think there is. And there's first off, We've seen Caterpillar break to an all-time high. We've seen Nvidia break to an all-time high. We've seen Microsoft break to an all-time high. Okay, so that would be, and first off, classical traders don't care about that, because a classical trader is just going to say Nvidia's up here doing a double top. They're going to say Caterpillar, when it broke to a new all-time high, is doing a double top. And the plethora of other stocks that have hit all-time highs, Microsoft, right, is doing a double top. So classical traders don't care about that. Elliott wave theorists do. Why is that? Well, because in Elliott wave theory, the bears are still making this. We have to understand the arguments that you have to understand the arguments that the other side is making as a prerequisite to Elliott wave theory. I actually don't have a bull argument. I have disputes to the bear argument, if that makes sense. Okay, so that probably just threw a lot of people off. Let me explain. The bears are still making this argument from Elliott wave theory. This is wave A. This is counter trend wave B. We're going to have wave C lower. What's the problem? Well, what's the problem is if you look at Microsoft, if you look at Caterpillar, if you look at even in-phase energy, if you look at another ETF that I'm about to go over, but Microsoft, Caterpillar, and Nvidia, they've already invalidated this view, right? They've already invalidated this view. So if the bears have this for their SPY count, and I say, well, what's your Nvidia, your Microsoft, and your Caterpillar count, they don't have an answer, right? And that's just a short list of stocks, right? So to Elliott wave theorists, this does matter, because the bears are going to make one argument for SPY, and then they're going to make a completely different argument for Nvidia, Microsoft, and Caterpillar, and that's where things can get ugly for shorts. Okay, that's where we can start seeing the market go up one by one, and then instead of realizing, wait a minute, there's a whole bunch of stocks that haven't gone and followed Microsoft, Nvidia, and Caterpillar yet. Again, this is all from an Elliott wave standpoint. It's a little silly to be making a completely different argument for Nvidia, Microsoft, and Caterpillar than I am for SPY. That's the simplest way to put it, right? So what are the bears? Does that mean that the market can't go down? Of course not. What the bears are going to have to say, right, if they think about what I just said, is that they're going to have to say that Microsoft and Nvidia and Caterpillar are expanded flats. All right, now expanded flats exist in Elliott wave theory. Okay, there's nothing wrong with saying something's an expanded flat, but an expanded flat is basically where there's a wave A, and then wave B breaks above the wave 1 high, and then there's still this dramatic wave C lower. It's basically the Elliott wave version of calling everything a double top. All right, you don't really want to be the guy doing that, and at a certain point, you're not really even doing Elliott wave. You're just kind of saying, I think the market's going to crash, and it doesn't really matter what the count is, right? I think this is wave 1 and wave 2. We're going to see SPY continue on this rally towards 609. I think that Microsoft at an all-time high is a lot of evidence for the S&P. So is Nvidia. So is Caterpillar. I mean, we're talking about different sectors here, and even just to throw a bone to financials. I don't think financials are as ugly as a lot of people think. I look at financials and I'm like, where are you getting this banking crisis idea from? That 1, 2. Okay, I did buy Credit Suisse at 10, and I bought a straddle on Credit Suisse when it was at 10 as well. I got a 35% return on the straddle. The commons position basically went bust. That was managed with position size. So I don't want to just laugh at the banking crisis idea. Okay, the banks, there have been some banks that have not done well. Okay, the banks that most traders and people who are analyzing the market on, the top XLF holdings, much different story than Credit Suisse and First Republic. For JP Morgan, 1, 2, 3, 4, 5 waves up, an ABC correction. I mean, this is wave 1, wave 2. I mean, I could almost teach an Elliott wave theory class with this one. Okay, so let's just do it. 1, 2, 3, 4, 5 waves up. Let's look at this relative strength index. We have a wave 1 and a wave 2. Now, the key to wave theory is look for a wave 3 that makes a new high, a super, super big high on the RSI, a shallow wave 4, and just to give you a little bit of fun, on the weekly chart, I'm looking for wave 4 to go kiss that 50% or that 50 level on the RSI. So wave 1, wave 2, wave 3 makes this big, 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 big high on the RSI. Wave 4 hits the 50 level. And then wave 5, you make a new high with momentum divergence. That's the definition of a 1, 2, 3, 4, 5 waves impulse. All right, that's the simplest way to put it. So when I see a 1, 2, 3, 4, 5 waves impulse, I'm looking for an ABC correction to in between the 61.8 to 78.6% fib. Now, if someone wanted to say that's not wave A, that's not wave B, this is wave A, and this is wave B, that's wave C, that would still be the same outcome. The reason that I would be a little different to that is if I take the length of wave A and I place it at the wave B high, we don't quite get there to that equal X target. So wave A is almost always, again, there's an exception to every rule. Expanded flats exist, truncated wave C's exist. Almost all the time, wave C is longer than wave A. Almost always. So I will almost never post the chart where I haven't measured that wave C is shorter than wave A. Okay, so this is an ABC correction between the 61.8 to 78.6% fib. We held above the stop of 97.46. I also used this shallow wave 2 low of 90.78 as an invalidation. I think this is wave 1 and this is wave 2. And have we broken above this high? I actually don't know. So don't be afraid to get the ruler out. 144.34. Okay, so 144.34 was the high. 144.02 is the high. So we have not yet broken this wave 1 high. That means Elliott wave bears, those pesky bears, until the moment we break this high, are going to look for something like this. Short term, wave 1, wave 2, wave 3 correction. Anyway, that's just to cater to the bears. I think we are going to see JP Morgan break that high. If I had to say, I think this is wave 1 and wave 2. And we're going to see the Morgans and financials go a little higher. Now, one of my holdings that's not necessarily a financial, but I've noticed that this sector is doing a little well, is the real estate sector. I'm in Simon Property. I've trimmed it a little bit, but I think that real estate and financials are going to move together. If we look at Simon Property, I think that this is a very similar to the financials. I'm expecting real estate and financials to move together. I could be completely wrong about that. I think this is 1, 2, 3, 4, 5 waves up. Let me go on the weekly chart. 1, 2, 3, 4, 5 waves up. An ABC correction at the 61.8% retracement, just like JP Morgan. Did we go a little lower for that wave 2? 100.17. 100. Okay. Just like JP Morgan, I'm looking for this to be a wave 1, a wave 2, and looking for Simon to enter wave 3 of wave 3. So I'm expecting that we're going to see the kind of real estate and financial theme wake up for Simon. That wave 2 low, I'll get it in a sec, is the invalidation. Look for a wave 3 up towards 160. The wave 2 low is 86.0. That's pretty far for a value stock. I'm in Simon. I'm also in Mid-America Apartments. I'm looking for real estate to do a little well. One real estate sector that I'm particularly interested in, I've gotten a little bit of a position in AG&C. I have a straddle and strangle. I have a straddle on AG&C where I own the January 2023 10 call. The January 2024 10 put and the January 2025 10 call on AG&C. So just to be clear, on AG&C and just real estate in general, I own Simon Property, I own Mid-America Apartments, and I own Mort, M-O-R-T. And I have my favorite way to manage risk in that sector, besides the fact that they're paying a whopping dividend, is a straddle on AG&C. I've moved the call leg out a year when I had the opportunity to, but the call leg is the 10 strike call on AG&C that expires in January of 2025. The put leg is the 2024 January 10 put. Anyway, I'll get into AG and C in a second. I think Mid-America Apartment is another one that I like. Wave 1, Wave 2, another Wave 1, and another Wave 2. I'm looking for, this is a Wave 2 that's ended at the 61.8% retracement. I'm looking for Mid-America Apartments to enter Wave 3. So I'm expecting financials and real estate to move together. That's a little reason why it was hard to make this video, because I want to talk about some, banks, some tanks, some value stocks, some small caps, and I also want to talk about semiconductors and tech. And I also want to talk, if I had it my way, I'd be talking about bonds too. But anyway, I think XLF 1, 2, 3, 4, 5 waves up, and ABC correction at the 50% retracement, another wave 1 and another wave 2. I'm looking for XLF to hold that wave 2 low and enter, wave 3 of wave 3, right? Something like that. But anyway, that was all just to say, see XLF up in the 40 range. That was all just to say, and I'm just so freaking happy that bar chart got rid of this stupid update. I'm telling you, every single time that I would have done one of these switches, it would have said, you need to be Premier, you need to be Premier. And then as soon as I complained about that update yesterday, gone. I'm telling you, man, I'm freaking telling you, it worked. I've got clout. That was all just to say that a lot of the S&P 500's evidence doesn't just come from Nvidia, Microsoft, and CAT. It also comes from, I think that if we look at financials and industrials, I posted about Honeywell recently, and I'm going to get into the airlines a lot, in this video too. I think that it's hard from an Elliott Wave standpoint to be really betting against the S&P making an all-time high. Now, when I'm fortunate enough to take a position at a low and the market rallies, typically I'll manage risk with some sort of methodology like this. The first methodology is that I can buy a straddle. Yeah, I can just buy a straddle on the Metaverse ETF METV after SPY rallies, and then I don't care if the market crashes. All right, so that's option one, and I did that. Option two is when I was at this range, I could have not just been buying something that pushes equities. I could have been buying something that sells covered calls on equities as well. That way, while we're getting way up here, I don't have to worry about the market retracing the whole move, because consolidation and chop and going sideways is going to be very good for those covered call positions that I bought in this range, because they're getting in the money more and more and more as time goes by. Option three is if I buy some, let's say I buy a more growth related holding, a more equity related holding, and the market goes up, or in that holding goes up 40-45%, I'll sell, say, 35 or 40% of the position while it's up 40 or 45%. So that way I'm taking profit and I still have even a little more than the original exposure of the position. That's the best way I know to let the winners run. I'm 100% positive that's not the only way to let the winners run, but, selling some call premium through an ETF, taking a long gamma position on an ETF that's pretty favorable to option buyers, or taking partial profits, but still maintaining the original exposure. Those are my three favorite ways. If we look at the QQQ, not too much different. The only elephant in the room is that if we see this, if we see this weekly RSI break above 76.78, and it got as high as 76.03, then we're going to have a problem with this chart. All right, we're going to have a problem with this chart. Why? Well, in Elliott Wave theory, there's a rule that wave 5 ends with momentum divergence. So if this is wave 1 and wave 2, and this is wave 3 and wave 4, then wave 5 should end above the wave 3 high and with a lower weekly RSI reading than the wave 3 high. If we get to a point where, let's say, I know it sounds impossible, that the Nasdaq's at 409 and the weekly RSI is above 77, 78, then I don't think wave 3 is the correct count here. And I don't think wave 4 is the correct count there, because wave 5 ends with momentum divergence. If we break this weekly RSI high, the elephant in the room is that that wasn't a wave 3 and a wave 4. It was another wave 1 and another wave 2. And I don't even like saying that. Oh man, I wish I could keep that part of the video for Varesh and Jason. Like, I wish Jason and Naresh could have just seen that. Because that's something I didn't want to say out loud. I wish those 7 positive commenters on my last video could have just seen that or heard that. But if we break above this weekly RSI high on the Nasdaq, then that's gonna confirm. And let's say also we break to a new all-time high on price, new high within the cycle from the March 2020 low on the weekly RSI. Well, if wave 5 ends with momentum divergence, a break above 77 on the weekly RSI and a break to a new all-time high would violate that rule. It would suggest this isn't wave 1 and wave 2, wave 3 and wave 4. We're going to break to a new all-time high and then super crash. It would be something that many people for a really long time, and to be honest, everyone, including me, was afraid to even suggest was a possibility. That this isn't 1, 2, 3, 4 on the Nasdaq. It's 1, 2, 1, 2. And I went all of 2022. I didn't see a single wave theorist even mention that was a possibility, even though we ended at the 61.8% retracement on the dot. I didn't hear a single wave theorist say 1, 2, 1, 2, wave 3 of wave 3. So that could have been a bigger opportunity than a lot of people thought. But before we get into that, I just think that as far as an evidence standpoint goes, I don't see where in a world where Microsoft and Nvidia is at an all-time high, that the proper Elliott wave count is that you have some sort of evidence, unless you're using astrology and numerology and, talking to the devil, that this is wave A, that's wave B, and it's time to prepare for a super crash. Now, from a risk management standpoint, it's always time to prepare for a super crash. From an Elliott wave standpoint, not so much. The bears have a lot of work to do, especially with Microsoft and Nvidia at an all-time high, to say they have evidence that we're not going to see the Nasdaq making an all-time high at some point in the future. I think that one ETF that really kind of echoes that message is SOXX. Where it's like, it's kind of, I don't want to say bizarre, but it's definitely ballsy. Definitely ballsy to be assuming that SOXX ain't going to make an all-time high here. Sorry, I'm about to be out of Texas, so I got to talk like a redneck while I can. I got to talk like a dumb redneck while I can, baby. Y'all ain't heard nothing about my dumb redneck Texas accent, but when I try to woo the country girls, it comes out. Anyway, SOXX, wave 1, wave 2, wave 3, wave 4. Now, it's going to take a lot for SOXX to break this high. They got to get all the way up to 86.82 on the monthly. On the weekly, 78.93. A little bit more work to do on SOXX than the Qs. But with Nvidia at an all-time high, this is, I mean, really? You have Elliott wave evidence, not classical TA, call everything a double top. You have Elliott wave evidence that we're ABC right here. This is the wave B, and we're looking for the super correction. And you know what? I don't have any problem preparing for the super correction. I don't. My problem is that I'm actually more prepared for this super correction than anyone who's going to be projecting it. I have long guts positions. I have deep in the money puts on the Metaverse ETF. I have cash. I have covered call holdings. I'm really diversifying into bonds right now, even to kind of stabilize the portfolio. I'm prepared for this. I like talking about the super crash, but if it's about Elliott wave evidence, I just don't see where that's there. Now, you know, that doesn't mean it can't happen, right? But it's all about analyzing the market as a whole. SOXX. I mean, there's a few, you know, I swear, and I know that this is the most Furu thing to say. I was gonna post about it, but I didn't. I wussed out. I wussed out about talking about Marvel Technologies. I promise I saw it on the freaking Strangler straddle screener. And this AMD chart's honestly a mess too. But if we can just move to the side for a little bit, big picture, just like AMD, 1, 2, 3, 4, 5 waves up. Look at that RSI. Wave 1, wave 2. Wave 3 makes the highest reading of the whole sequence. We have a shallow wave 4, and we have a wave 5 higher that ends with momentum divergence. That's a 1, 2, 3, 4, 5 waves impulse, ABC correction at the 61.8% retracement. I think AMD, like SOXX, like Nvidia, it's not necessarily programmed, but it's hard to bet against it. It kind of just trudging its way up there. So from a wave theory standpoint, there is actually a name for this type of sequence, and it's one that hasn't been really discussed in a while, because it's not been people always say that I only say things are 1, 2, 1, 2 Elliott wave nest. Now I want to address that for a second. The first thing is that when I'm posting on Twitter and making videos and making my own investments, I am focusing on the setups that I think are 1, 2, 1, 2 Elliott wave nest. I'm not focusing on stocks that have already been impulsing to a new all-time high, that are up 250, 300%, you know, in the past couple of months. You know, that's not really worth anyone's time, especially mine. One of the biggest reasons I love wave theory is it allows, you know, me to take advantage of that, you know, timeless trading mantra of buying low and selling high. But wave theory is really the only type of TA that gives you that answer. When do you buy low? When do you sell high? And there's a few other ways to, you know, figure out the questions of that too. But in wave theory, I believe we've confirmed this is a wave 1 and a wave 2, and this is another wave 1 and another wave 2 on SPY. Okay, so the name for this sequence right now that goes up is called a series of. It's called a series of 4, 5. A series of 4, 5. So we have 1, 2, 1, 2, and now we've broken out into wave 3 of wave 3. So I'm not really the wave theorist that gets into this in super micro counts, all of these. It's important to understand that in wave theory, wave 4 is the shallowest wave. Wave 3 is the most profitable wave. And wave 1 is the measuring stick. That means that to the buy side, wave 2 is the wave that I want to buy. Wave 2 is the wave that I really want to buy. And that's honestly really the only wave I care about trading, right? So this is wave 1 and wave 2. This is wave 1 and wave 2. And now we've entered what's called wave 3 of wave 3. And so the expectation is that there's a fractal nature of Elliott wave theory. We're going to have shallow wave 4 corrections and wave 5s higher. Wave 5s higher. We're going to have shallow wave 4 corrections and wave 5s higher. We're going to have shallow wave 4 corrections and wave 5s higher, right? And so the idea is that these shallow wave 4 corrections like this one are going to, you know, bring in the bears a little bit, bring a little bit of complacency, pause the market for a little bit, wave 5 higher. Shallow wave 4, wave 5 higher. That's the name of the sequence, and I'm not going to go just get into you know, all those little itty bitty sequences. What I will do is point out that if we look at the rest of the market, there's a lot of, you know, there's a lot of momentum to push, and there's a lot of, you know, a lot of laggards to follow. I think the Dow Jones right now, you know, we're not within the wave 3 of wave 3 yet. We're not experiencing the sequence of, you know, shallow wave 4 corrections and wave 5s higher that I expect SPY is going to be experiencing until it, you know, reaches that equal X target of 600 in the big picture. If we look at the Dow Jones, it's still wave 1, wave 2, wave 1, wave 2. this could be the next index to kind of pick up some momentum and even get up towards, the 370s for DIA. As far as invalidations and stops go, I'll take the 78.6% retracement, call it 298. So above 298, I'm looking for DIA to go 1, 2, 3 up towards 379 would be that equal legs target. Boeing, we're getting there's a lot of evidence from transports and industrials right now. It's slowly at first and then all at once. That's kind of the motto of the nest. It's wave 1, wave 2, wave 1, wave 2. Those are both very, very slow sequences. And then wave 3 of wave 3 is when things start to pick up. Boeing for a long time, Royal Caribbean for a long time. It just seemed like the count that would never play out. And, Royal Caribbean, which I'm going to go over, gave the first, real piece of evidence from a wave theory standpoint that, wait a minute, this is the long-term cycle. It was just taking a long time for a lot of these transportation names. This is wave 1 and wave 2. This is a monopoly. And this is another wave 1 and another wave 2 for Boeing. And we can see, Royal Caribbean is already above this high. I expect Delta Airlines is going to be above this high. I think we're seeing that travel is coming alive and that we're going to see Boeing above this high too. So what am I talking about? Royal Caribbean, puppy trades. I was told by FinTwit gurus that only 7 stocks were driving the market higher. Well, if you thought 7 stocks were driving the market higher, then you've never heard of 2 countries called Germany and Japan. So you probably don't know much world history, but Germany and Japan, they've been at all-time highs for a hot minute. Anyway, someone told me that. I should probably check before I say that. But there's been a lot of German stocks. It's been a global market breakout. Who was telling you it was 7 stocks, man? They weren't looking at Royal Caribbean. 1, 2, 3, 4, 5 waves up. And by the way, there were a lot before Nvidia. There were a lot before Microsoft. Nvidia and Microsoft. The evidence comes from ETF allocations. That's the simplest way to put it. If there's a ETF that hasn't done something yet, but a lot of the top holdings have, that's wave theory evidence. Okay, classical traders, they don't play by that rule. I'll talk about a good example with home builders next. Anyway, I got off topic. I'll talk about a good example now with Royal Caribbean. 1, 2, 3, 4, 5 waves up, wave 1, ABC correction, wave 2, another wave 1, another wave 2, 78.6% retracement, boom, wave 3 of wave 3, explosion. Okay. Wave 3 of wave 3 explosion. Now, Royal Caribbean is above this February 2021 high. This is massive evidence for, I don't mean to get carried away. I don't mean to get, I'm supposed to be boring. I'm so boring. It's finance. Let's just make it boring and talk about, price. This is massive evidence for Norwegian cruise lines. I think it's massive evidence for American Airlines, and I think it's massive evidence for Boeing. Travel is it's alive. It wasn't this count's real. This count's been confirmed now. 1, 2, 1, 2. It's within wave 3 of wave 3. We're gonna see RCL, come alive. Norwegian cruise lines would be the most close parallel. Damn it, Barger. Anyway, they must have heard me when I was making this video. But I think this is 1, 2, 3, 4, 5 waves up for Delta, and this is wave 2. And doesn't this kind of look exactly like Royal Caribbean? Well, they should. They're in that travel sector. Another wave 1, another wave 2. Possibly we're going to see the same song, second verse with Delta Airlines. Southwest Airlines is still down here. American Airlines is still down here. I'll prove that Norwegian Cruise Lines, just because I don't want to talk about 2 airlines and Boeing and never, good Lord, man, I started the video and that was my NCL chart. But anyway, what I was trying to say is that if we look at, I think Norwegian Cruise Lines is going to be, if I had to say, I don't think it's just going to be NCL, but I think what's going to happen is that we're going to find Royal Caribbean was a leading indicator for travel as a whole. It was especially the cruise lines. By the way, my favorite screener, iVolatility.com, top 200 volume and open interest with lowest IV ranking percentile, had 7.03. had Carnival Cruise Lines on it. It also had GameStop on it. It also had silver and bonds on it. I want to get into those too. I'm telling you guys, I had a lot to talk about in this video. But I think, Royal Caribbean is going to be, or Norwegian Cruise Lines is going to be a benefit of the evidence from RCL. Really not very useful stops right now. I mean, yeah, there's just really not very useful stops. The nearest low is 12.16. This might just be better evidence that, shorting the market, or shorting these names because RCL's had a big rally is not the Elliott wave move. American Airlines, let's see, 12.65 isn't bad. Still not the greatest, but the exact same idea that this is wave 1 and wave 2. This is another wave 1 and wave 2. It took a long time, but the count was correct. And I don't correlate airlines with growth or anything like that. I do want to get into some growth though, because I think we're seeing that this sector is going to come alive. If we look down at ARK right now, yeah, they're back. Oh well, at least I got a few of them, man. But ARK, possibility that this is wave 1 and wave 2. ARKW has already broken the same relative high, and I think that may be a leading indicator looking at ARK and Roku that we'll see in the shorter term time frames that this is a wave 1, wave 2, and wave 3 that I'm expecting for ARK. There's a small wave 1 there, small wave 2, and I'll just make those again. Yeah, but I'm looking for something like this for ARK from this low. This is a wave 1 and wave 2. ARKW is already above this high. So the next kind of shorter term destination would be up in the lower mid 50s for ARK. I would be more interested in if we see ARK start to impulse 1, 2. Will we break above this RSI on the daily chart or the weekly chart of 73.38 on the daily? On the weekly, that high has already been broken, but we haven't broken above a high yet. So we'll look at the daily. If the ARK daily chart breaks to a new high, and I see the relative strength index on the daily chart break above 73.38, to me, that's going to confirm this is wave 1 and wave 2. A wave 3 of wave 3 impulse has been entered from this low, and I'm also going to say it's been entered from this low as well. Let's get into some crypto. The biddies, I think I need to chart the actual Bitcoin. I'm being selfish and just charting BITO, but I do think the Bitcoins, I must have, did I really not? Yeah, okay. I want to chart Bitcoin, so we're just going to chart Bitcoin now. Let's go. Anyway, it's not too complicated really. So first off, this is a new high for Bitcoin, right? So there's really only a few ways to look at it from a wave theory standpoint. The bears can say 1, 2, 3, 4, 5 correction. 1, 2, 3, 4, 5 correction, right? That's what the bears can say. It's important to note that even if that happened from a wave theory standpoint, bulls would still be looking for wave 1, wave 2, wave 3 of wave 3. All right. Wave 1, wave 2, wave 1, wave 2, wave 3 of wave 3 is the other option. Now, Bitcoin itself hasn't confirmed that by breaking to a new high on the RSI within these cycles. But as I posted about recently, Marathon Patent Group has, where we can see wave 1, wave 2, it broke to a new wave 3 high. It also broke to a new high on the relative strength index, where if we look at Mara on the weekly RSI, in the same way that this high was made when Bitcoin's relative strength index was 66.69, Mara is broken to this new high, and its relative strength index is broken to a new high as well. So that has confirmed for Mara at least, which is highly correlated to Bitcoin, this is a wave 3 of wave 3. That means that wave 2 low down there holds. We can see Bitcoin, 24.8K, 24,815. I don't mind it above wave 2. A wave 3, I'm expecting we'll see Bitcoin in the upper 30K range pretty soon.